Hello, today is May 16th, 2020. We'll go over our calls. Look for the pattern with the early high. Tends to be a rally day with a high in the final hour. This is it. And Monday's pattern has an early high also. We said unless we gapped down smartly, it should be an up day. Well, we gapped down smartly, so even though it was an up day, there was no call regarding its close. And here's what we said. Normally rally day, final hour high. Best guess I had was unless we dropped early, we'd consolidate. We did drop early, so we're going to reassess the situation today, come up with a different opinion. And these are the patterns I expect to see next week. Well, we did hit a new high, but I wasn't really impressed by it because of its timing. You're not going to have institutions wait until a few minutes before the close to go buying with abandon with a wall of purchases like this. This is a wall. Well, it's not quite a wall because of that, but it's a rally. We'll call this a hole in the wall gap. Resistance just on top. With a few minutes left, there's resistance right over this high. And breaking it this late doesn't really count in my book. We still have this target. Ultimately, it should be seen, but it makes any rally from here quite suspicious because normally you don't have to wait very long for these numbers to print. During the day, MEJT had an ultimate buy and an ultimate sell. Ultimate means eventually we did get the sell. Ultimately, we did get the buy ultimately, but usually when these print in the same pattern the rest of the morning, if it prints in the morning doesn't lead too much, you can see how even at 12 noon Central Time, we were still within the range of the reference par. We had this rally. MEJT said this drop wouldn't stick. It retraced. Said this rally was false. It retraced. Doesn't say how far it'll go. Doesn't say when it retraces. I have to tell you, when there's a big rally like this, there's a natural tendency to want to just jump on it. But when you know it has to retrace to this range of the bar, it makes it easier to temper one's enthusiasm and hold off on a purchase. It doesn't mean you couldn't have gone straight up and retraced later. It doesn't really say that, but at least it gives you a cause to pause, as it were. Well, here was the issue we had. We had this A move down. Then there's a B, and the question, was this a B? Or was this A of B, B of B, and we're going to have a wave C up? Well, if it's going to be a wave C up, I'd expect it to be impulsive and non-overlapping, like wave A. They're normally similar in character. And that's overlapping. That's not really similar in character to me. Here's how I'm calling it. You had this wave 1 down. Here's wave 2. This wave down here is a 5-wave impulse. You've now got an overlapping, weak, corrective wave. It's stopping except for this last little blip up at a 50% retracement of the entire decline. There's a good Fibonacci argument to be made for this corrective wave 2 being over and for an impulsive wave red 3 starting. And the real cause for concern here is the cup with handle pattern. Here's a smaller cup. The handle slopes down. Typically, once you go over the high of the cup, a rally ensues. We now have a larger cup with the handle sloping up. That's not really a sustainable pattern. Typically, once you break down, hold it for a day or two, you might rally up to the lower end of the handle, but typically that's it. And the target for this is to retrace the entire leg up, which means new lows. To confirm this, you really have to undercut this low. It hasn't happened yet, but that's pretty close to where our ultimate target is. So we now have a rally overlapping a corrective rally up to resistance, and all we need to target a big drop is to undercut that low. I'm going to ask you to do me a favor before we get into Monday's call. I've been doing these videos for free for nearly 9 years. Never asked for anything back from the viewers, but now I am. There was a recent negative review of my book on Amazon. Criticism was the system didn't work. Now, I don't mind criticism if it's legitimate, but the system obviously works. And if I just post something on Amazon saying it works, people are going to say, well, he wrote the book. Of course he's going to say it works. It would really help me if people could either post replies on Amazon, saying they've seen calls based on the system for a long time and it really works, or they could give me a 5-star review and say the same thing. If it comes from somebody else, it has a lot more credence than if it comes from me. No system works if people don't understand how it's used. I give frequent examples in the book of how to apply it. Some people give it a cursory glance, use the numbers as entries, which is wrong, rather than as targets, which is correct. Somebody wants to buy the book. It really helps if they know it works. Thanks in advance. Let's go on to Monday. Monday's pattern has the early high. We could and likely will gap down first. Friday's pattern repeats every 32 calendar days. Usually it's a strong rally day. That means non-overlapping in my book. With a new high near the close, we got the high. Its timing makes it very suspect, and the rally was weak. A weak rally into strong resistance opens often is reversed at Monday's open. If, it's an if, we gap down strongly, if we gap down strongly, then we're open to a retracement of the current leg up. We still need confirmation. Any break has to be confirmed by subsequent action. But if we do gap down strongly, which I think will happen, don't have to risk money until I know for sure. If that happens, this entire corrective leg could very well be undercut. Of course, if we gap up smartly, the whole pattern's killed. We'll have to wait for Monday's open to be sure. But if we gap down, particularly if we gap down under this low, it's hard for me to see how we recover. Early high Monday, and that's today's call.